the Ethereal Summit in virtual reality. I'm Luke Kerner with Crypto Mondays, and I'm here with Ryan Selkis with Masari. Welcome, Ryan.
Thanks, Lou. This is the very beginning of VR, and you can tell.
I was having a little trouble hearing you.
I was saying this is the very, very beginning of VR, and you can tell.
Yes.
But it's good to be
here. So good to have you. So can you tell me, I assume you're aware of what your avatar looks like?
I didn't spend a whole lot of time thinking about the setup. And so the first couple times I played around, this helped me stand out from the other egg avatars on our team because our entire team got VR headsets. So this was, I think, a perfect avatar just to stand out in the crowd and have everybody notice who is who. But I'm pretty well known for having avatars and pseudonymous presence online anyway. So this is, I guess, no different.
So there you go. Well, cool. Well, my guess is most of the people in the audience with you, they are know who you are, but you're running. You've been in this space for a long time at DCG for a while, and now you started Masari Crypto. And how long ago was that?
So we started the company in late 2017. I was actually at Consensus in Q4 of 2017 during the real heights of the mania. And then we started Masari Q4 2017, formally incorporated and raised money beginning in 2018, and have grown out the team to about 15 full-time in the past 2.5 years, focused on solving some of crypto's hairy problems around data integrity, transparency, and disclosures.
And so now, here we are, I guess, 2Q 2020. Obviously, things have evolved and evolved and evolved. How do you think of the business today, kind of relative to how you were thinking about it when you started it?
I think for one thing, we were coming out of the tail end of a bubble when we started the company. And went through the pretty vicious downdraft in 2018 and kind of early 2019. But it seems like we're kind of through that, low and kind of starting to go into the second phase of our life cycle as a company, and hopefully hitting our first really, aggressive bull market with everything that's going on in a macro environment. So the company itself, we've built a tremendous amount in a short amount of time with a small team. We have 80 projects that have worked with us on our disclosures registry. We've got a pro analytics tool that helps investors and industry professionals scour projects and do research on projects across hundreds of metrics, thousands of assets that we're covering. And then we actually have an event coming up ourselves, not in VR, but in using a virtual platform called Hopin end of this month in early June. So we think about ourselves and our primary mission as bringing organization and context to the sea of noise that is crypto data and information.
Very cool. And so I know the upcoming conference is a big focus. How do you describe the conference relative to, obviously the lots of other conferences going on?
Sure. For people that don't know my background, I started as an independent analyst, was at Digital Currency Group as an investor, where we backed a number of the top companies and protocols early on in 2014 to 2017. We acquired CoinDesk, and I ran CoinDesk and built out the Consensus conference. So, the things that you need to build a successful, conference brand are, really network understanding of the industry and kind of what the narrative structure of the industry is, and then just actual, experience, trial by fire, but building them out and knowing how to entertain people. So, I've wanted to do another event since I left CoinDesk, but we also didn't want to play second fiddle to anyone. There's obviously a lot of physical conferences. So, when we first started talking about mainnets, it was in the context of building a big tent virtual event brand, and having Mainnet 2020 be our flagship. Originally, we were going to do it around Consensus, and then the coronavirus, obviously threw everybody's plans off, and now all of those events have gone virtual as well. So we decided to push ours back and really invest heavily in the networking component, the virtual expo, and making sure that we can create a global event that will ultimately be as close to the real thing as possible, but also kind of provide some of the benefits that you wouldn't otherwise have at a physical event. So more inclusive, you get people that otherwise might not be able to travel, and you can certainly extend invitations and accessibility to folks in different time zones, and students and other people that traditionally might not have had access to an event. The question of how do you do that effectively is, I think, twofold. One, you can invite great guests and make sure that you have the who's who there on the speaking side and sponsor side. And then on the other hand, I kind of believe that you need to not have these things be free, because there's got to be some spam prevention feature, right? So I see the pop-up right here. I have the role of host in this event. Please be responsible. Okay. It's good that it's good that you have like moderator capabilities, but if you just open up the entire world of potential attendees to join a virtual event, you're gonna have much bigger issues than you would at a physical event where the price to acting up is $1,000 per ticket, right? So there has to be some attendee proof of work. In VR, I think it's a little bit less of an issue, because the work that's been done is people learning this fledgling platform and actually investing in the equipment, right? But if you're just opening up like the equivalent of a webinar to anybody and leaving the comments on, my prediction is you're going to have a bad time. That's not going to be it's not going to be a successful event. So I think over time we'll do a bunch of these. We'll do kind of satellite conferences around much bigger conferences. So could we do the VR or virtual kind of meeting room around DevCon, around Web3 Summit, around Consensus Invest, and then obviously have Mainnet be our flagship. I think that's the ultimate direction that we're going, and it kind of fits with our business and kind of the information network that we've been building beyond that.
Super interesting. And so I know you've got a lot going on at the conference. What do you think will be kind of the best attended parts of the conference?
I mean, we'll see. The attendance is kind of split in these platforms, right? It's on the main stage, general session, they're going to have the bigger speakers, but they're not necessarily going to be as interactive. So I actually am very excited about the sessions component that we have, which essentially allows you to create an unlimited number of breakout sessions and whiteboarding sessions in kind of like unconference format. So best of networking, best of organic meetings, and certainly take a little bit of the burden off of the organizer, because a lot of people can just create these things with either on the fly or kind of with their friends, either at the event or kind of shortly beforehand, and it offers a lot more latitude and obviously a lot more real time feedback in terms of what attendees want to see. And then obviously we think that we're going to do a good job on the main stage programming, because we've already got 100 plus confirmed speakers and this awesome network to pull from.
No, it makes a lot of sense. So obviously among the biggest things happening at the moment, obviously, is the halvening. What are your thoughts there in terms of what you think the impact's going to be, or if we've already had it?
I don't know if we've already had it. I think the halvening really is a meme above all else. I don't really put much faith behind the halving as this big supply or demand shock to the system, right? It's been known from day one If you look at the daily mining issuance as a percentage of day-to-day volume, it's such a low proportion to the order books and the daily liquidity in these markets that it's a much different story than it was 4 years ago, 8 years ago. I think that by comparison, you look at something like Zcash, that issuance rate is going to decline from 36% inflation today annualized to 12.5 in 6-7 months. Like that's significant as a percentage of daily trading volume. It's not the same with Bitcoin. Bitcoin, it's going to drop below 2%. I think that matters more because it's going to harden this digital gold narrative. That puts us below the Fed's target inflation rate. It puts you kind of on par with what annual gold production is, and you're starting to see that really catch fire with larger investors. Renaissance started trading Bitcoin futures. Does that mean they're going net long? Well, maybe not, but it means that there's action in Bitcoin, and it's a highly credible, the most successful hedge fund in the world over the last 30 years. Entering the market and treating this as a serious asset. Paul Tudor Jones yesterday, Raoul Pal, and some of the macro guys that have been piling into that trade. I think those are the types of investors that need some type of quick meme and quick narrative that they can rally around. And between what's going on in the macro environment and then this dip below 2% inflation, it's the perfect combination at the right time. But it's all narrative, right? I don't really think too much about the the mining dynamics or mining death spiral or any of that. Right? So we could have a much longer way to go, and it's got almost nothing to do with the additional supply that's coming out of the market.
Okay, that makes sense. Shifting away from Bitcoin, then it seems, in my view, kind of the most exciting thing going on in the market today are with stablecoins and the dramatic growth in market cap we've seen there. What are your thoughts on that space?
I think Libra and China CBDC are probably two of the biggest unknowns, but net positive catalysts for crypto in general. And I say they're unknowns because it remains to be seen whether everything that's been built over the last 10 years ends up being treated as kind of the toy and the precursor to the more credible or much larger opportunity around kind of sovereign stablecoins. I tend to think that's far-fetched, just given how little trust there is in so many nation states right now, and so my general feeling is that stablecoin inflows are dry powder that can be deployed into crypto assets first and foremost, particularly if they're sitting on exchanges, right? If there was a ton of stablecoin creation and it was flowing through, credit card networks or remittance networks or something, a completely parallel use case, then you might say, okay, well, that's just, a perfect substitute for Bitcoin. So maybe that's not going to be very interesting for the Bitcoin industry to power things that we've talked about for a long time, like micropayments or remittances or, online commerce, things like that. Maybe that's going to go to stablecoins. But if you're talking about store of value and kind of censorship resistant savings and investment, then I think it's probably the best top of funnel marketing that Bitcoin could possibly enjoy.
We're starting to hear things like USDC is starting to be used for to pay employees or to pay suppliers. Do you think that has a chance of scaling?
Yeah, I mean, absolutely. And I know, Circle's gone all in on this use case. They and many others believe that digital currencies are, you're going to need some stable alternatives, right? You can't do payroll, you can't do large scale cross border payments and settlements for businesses that need stability and need to reduce their forex exposure and volatility. You can't do that with Bitcoin. You can't do it with any non-stablecoin asset right now. So I think that's already proven to be a very big opportunity, not just for payments, but ultimately it's going to have to be a big part of the lending and derivatives infrastructure and DeFi infrastructure going forward. Because the same way that you don't want to take the price risk as a merchant, because you want to be able to line up your costs of goods with your revenues, you're probably not going to want to take Bitcoin volatility risk if you're a borrower or a lender, because your default rates will spike if the price of Bitcoin goes up and it becomes more expensive to service that debt. If the price goes down, well, yeah, you've gotten repaid your principal, but you've still, in the grand scheme of things, lost as a financial services company. So I think USDC probably the leader in the clubhouse right now for non-crypto applications or non-crypto trading applications. USDT still by and large is the dry powder reserve currency for crypto asset exchanges and trading.
And do you see, and they seem to be gaining share there, not losing share, interestingly.
Well, I think it's been going back and forth, right? So it depends on, whether it's 80%, 90%. It's a power law distribution, and that will kind of ebb and flow for a while. But we have seen that USDC is, historically picked up market share versus Tether at times and very rapidly. You got to remember, all these currencies are so young. So I don't think that something like Tether has the same long-term network effects and moat and serves as the same shelling point as Bitcoin does, just because there's so much inherent risk in USDT, because you're still talking about secured dollar assets that are held at kind of legacy financial institutions, and Tether basically just employing this shell game to make sure that they keep their banking relationships and keep the full reserves on hand. That almost by definition, that doesn't scale. Like at some point, you're going to outgrow the financial institutions you rely on, and you're going to need either an algorithmically priced stablecoin, something like Basis, which never launched, or Reserve, or something similar.
And they never launched because of the regulatory environment.
Yep, exactly. But something like that, maybe if it's run overseas, could have a chance. And either that, or you're going to need something like USDC.
And so then looking then further across the DeFi landscape, what else are you excited about there? Obviously, a lot going on.
Yeah, I think to me, Bitcoin is still DeFi, right? The store of value and speculative element of crypto is still its primary use case, and in particular with this global environment that we're in right now, I think it'll continue to be. I'd say for the killer apps in DeFi right now, probably Nexus and insurance for hacks and kind of catastrophic loss, because that's going to be the norm for different DeFi applications. And then I think just decentralized exchange in general. So what Uniswap has been able to accomplish, the tools that 0x and Kyber have built, I think decentralized exchange is wildly underrated. And even though it's small, both in absolute terms and as a percentage of crypto volumes, its growth is just staggering. And so you're going to see, I think, you're going to see a ton more activity in DEX, and to me, especially as an American living in New York, or we have to live under the bit license regime. I view DEX as a killer app for retail investors because slippage doesn't necessarily matter when you're trying to put a couple $1,000 to work, but that might be the only option in town for many subscale assets or startups or kind of micro cap tokens as this industry continues to build out.
Because they just won't deal with any of the regulations.
Well, it's not just not dealing with the regulations, but like the concept of an automatic market maker, the automated market maker. You're never going to have. Binance is not going to be interested in the number 500 asset on market cap because it costs more to support trading than it makes them in fees. But if that's all powered by smart contracts and you don't care about 1 point of slippage, which by the way, Coinbase was getting 1.5 points both ends of transactions early on, I'd say that's kind of where most crypto assets are right now. Where if you could do a private placement for 1.5 percentage points. And you can do it, like Ethereum to ERC, then it's much more seamless, and I think a lot more. There's a lot more retail benefits than kind of current status quo when you're talking about investing at pre-public companies or non-cryptocurrencies, which are the only ones that are currently available in the U.S.
So interesting. So you see then this being an opportunity and infrastructure for these companies to raise capital and become liquid.
Yeah, I think so.
Yeah, which obviously would be such a sea change. And particularly, and then obviously, part of your registration is creating a standard by which then these companies can provide information and stats. You want to talk about how that's going?
So we're basically you think about Messari and our core business as an Edgar-like repository of information for crypto asset creators. So if you want to know about the governance around a project, you want to know about the technical roadmap, the token economics, the distribution schedules, the key constituents and kind of early stakeholders in a given project. We aggregate all that and then verify the claims that some of these teams are making. And I think that right now there's maybe only a couple hundred projects that really matters for, if that, right? That's being generous. That's kind of including assets that have market cap greater than 10 million or that have raised a few million in capital. So still laughably small from an asset class standpoint, but I think as more projects come online, as you see more kind of synthetic assets and digital goods, NFTs and all these kind of sub token markets like ISAs, income sharing agreements, and other kind of synthetic
personal tokens.
Assets. Yeah, personal tokens, exactly. Yeah. I think there's kind of this like financialization of everything that could happen, but the question is, like, where do you get reliable information and make sure that you're not just sending digital currency down a black hole and never actually being able to vet the claims or truly understand the asset that you're acquiring on the other side of that. And really that was 2017 in a nutshell. But the difference was everybody was making money, so nobody cared. I don't care if I understand this. I know it's going to pump because they've got a white paper and they've got these kind of couple of investors and everything has been going up and to the right.
Yeah, no, I think I'd rather not understand it and make money than understand it and lose money. From and we just got 2 minutes. This is the last question I'll ask, and then I'll see if anybody from the audience has a question. But how do you think about the world geographically in terms of how is the U.S. market growing, and how is it different from Europe and from Asia? Ryan? Ryan? Annalise, can you hear me?
I can hear you.
Hey,
Now he's
sorry
muted.
about that.
Uh, that's okay. I was just asking you just to talk about how you think about your business, the ecosystem in terms of geography. The U.S. versus Europe and Asia.
We work with so many global companies right now, and we do so much international traveling, or now kind of virtual networking and Zoom calls, morning, noon, and night. That I don't really think about where teams are located for our business anyway. We are not powering a token. We're not offering one. We haven't been, we're not trading them. So we're not offering a financial service. Because we're an information and data company, I think about it a little bit less. But it's still my opinion that the U.S. is going to be, probably years behind other regions. Probably years behind China on the central bank digital currency side, behind Europe in terms of regulatory clarity and friendliness, behind Southeast Asia for the same reasons. So at the same time, you still see the lion's share of activity in the U.S. because of the kind of strength of Silicon Valley and how much this technology resonates with people in the West. In particular. So I think, look, I continue to be bullish on a global scale, but you're going to see different pockets of innovation in different countries depending on what is essentially rendered illegal versus what's permissible depending on your geography. So will we see income sharing agreements and personal tokens take off in the U.S.? Probably not. The SEC is probably going to have something to say about that. We have a history with slavery. So you're going to see people get much more riled up about that much sooner. But there will be more permissive countries and cultures that allow for that type of experimentation. So, and I think it'll probably work on a case by case basis how that all plays out.
Okay, interesting. I hadn't heard that slavery take yet on the personal tokens, but I get it. So we've just got a couple more minutes left. If anybody in the audience has a question, you can raise your hand. We'll unmute your mic. Going once. If anybody has a question, I know a few of you out there. Going once. Going twice. Okay. Well, then I'll ask the last question. We're just down to the last couple minutes. And that, what are you most excited about in terms of what's coming up? Who are you most excited to hear from at your conference?
Well, I see Dan's here. Hi, Dan.
Yep.
Speaking of DeFi, so Dan Elitzer from IDEO is going to be with his team hosting our late night DeFi sessions on Tuesday, June 2nd. We've got a stacked lineup of speakers, basically the top 3 projects on DeFi Pulse, all the top DEX providers, Sergey from Chainlink, a few other high-profile speakers in that segment. And then Dan and his team are going to be hosting some after-hour sessions with other industry practitioners talking about some of the things that we hinted at here. But I think that is probably going to be the kind of bleeding edge of where there's opportunities for power users within the industry in the next couple of years to build. Everything else, it's basically just a holding game.
Okay, well, cool. Well, Ryan, thanks a lot for coming out to VR. You can wave goodbye to the camera up there. You can just take a look. Hey, Annalise, let's see, she stepped out for just a moment.
All good.
You want to just, yeah.
I'm here. Just here, take a.
Okay. Oh, there you go. Take a selfie up there. Up.
Cool.
Okay, Annalise, take one more picture with me and and Ryan.
My alter ego, my alter egress.
Two-bit idiot.
My camera wants to.
Where does two-bit idiot come from?
That is just the name that stuck when I started my Reddit account and first got into Bitcoin way back in the day. So
that's funny.
happy accident of history.
Yeah, who knew? Yeah.
We ended with more people than we started with. So thank you everybody for
Exactly.
coming out and experimenting with VR. This is fun.
Okay, terrific. Thanks, Ryan. And now
Thanks, y'all.
have our next speaker. Dan, you want to come up on stage? You hit the
and now
button.
I'll
There you go. Awesome. Okay. Thanks a lot, Ryan.
Take care.
Hey, Annalise, can
Yeah.
you kick Ryan just to the degree he doesn't leave, and Rick off the stage? You know.
Yeah, I have to take the host. I've been away